What's going on, guys? This is Tom with Stocked Up. I hope everybody's been having a wonderful day. It's very, very nice out here in Missouri, so I've been definitely getting my stuff in outside. You can definitely see right here is crude oil. Crude oil is bouncing right off the 1000 SMA right here. It's not bouncing right off of it, but it's pretty darn close. And you can see the stock go ahead, and it's kind of double bottoming here, and it's coming back up to this little nice support level here, and it's kind of consolidating right here on open with the futures. But we will see what it does whenever volume starts coming later in the night, whenever China's market and Russia's market, for example, opens. And another big market is the Middle East. So overnight, with oil and a bunch of different futures, those stocks, those futures, those like to move whenever the Chinese market opens, and like whenever Saudi Arabia's market opens and the UAE's market opens. It really likes to start moving whenever those markets open, because those markets really control oil a lot as well. And I've really been watching oil because it's been really volatile lately. And if you watched my video on Sunday, I recommended everybody buy a stock called VDE, which is a very good oil stock if you want to buy for long term. Keep in mind it did go up a little bit over the short term here, so keep in mind you might want to buy like 25% of your total position right now, because it could always fall back down to 30, and you might want to get in at lower prices, maybe like 30, 35. Even 37 is a lot better than 42. But if you would have bought after you saw that video and you got in on Monday morning, you could be up a total of 12% right now, which is pretty good for a pretty solid stock like VDE. Keep in mind over the long term, if we go to a long-term chart here, obviously it's fallen very significantly and it could always keep falling. So like I said, if you're going to go for a long-term play, put 25% of your position in and then try to get in a little bit lower maybe. If not, then like I said, 25% of your position. So if you're doing $5,000, you might want to put in, $1,500 into VDE right now. And if it does go up, then you're going to go ahead and rise, let's just say like 30%. So you're going to still make pretty good on that $1,500, make maybe around like $500, $400 area. So, pretty good gain just over a short-term little rise if it does end up going up, even with that little 25% position. So it's pretty much a win-win scenario here. If it goes back down, then you're getting in for a longer-term play. But oil may not hold up for the long term. So it's just something that if you have a total portfolio, I would recommend you only have about 15% of that into oil. But it's a very good opportunity right now to buy in and get oil in your portfolio. A really good website to look at if you guys are looking at oil is investing.com right here. Don't pay attention to the golf stuff up here. These are just their ads. I actually run ad blocker, but they do not allow ad blocker on their website. But pretty much this is their website. It's very informative. They have a ton of articles come out. So pretty much today, they put out an article 2 hours ago, stocks. Wall Street rallies on surge in energy. Hopes virus outbreak is nearing the peak. So obviously if the virus starts nearing a peak and then falling, that's very good for the markets. Very good for investors overall. A lot of investors have already put a lot of money back into the markets, especially the Fed has put a lot of money back in as well with the stimulus package and what the Fed's been doing, buying their own stocks and buying indices up. And the reason I watch investing.com so much and I have their app on my phone is because they send so much notifications, just like Market Watch. Market Watch is another very good one. But all you have to do is just come right up here to markets, go down to commodities, and then just select crude oil WTI. And then this will bring up their chart page. Don't look at any of this over here. This is just people randomly talking about it. But you can come over here and click news and analysis. And this is going to be all the news coming in for crude oil. And you can see all the stuff. U.S. crude futures rise 6% at open. Oil futures rise on hopes of production cuts. Solution to the oil price war. Pretty much all types of news from oilprice.com, Motley Fool, Reuters, investing.com themselves, everybody. So it's a really good website to look at for news, especially on oil. With everything going on in the market right now, you would think the market would be down, but the market really followed energy up today. And you can see that pretty much it looks very appealing right now on a long-term chart. So you can see that it just crossed the 1000 SMA and has been popping right above it. And we also just broke out of this little wedge pattern here. If we go back to a 15-minute chart, let's let that load up. So you can see that pretty much right down here we bounce off of the 1000 SMA, and pretty much we have been consolidating right up here. This is what I talked about in Sunday night's video, and we wanted to see this very nice rise up through our wedge, and we did overnight Sunday, and Monday just continued upwards and upwards until finally going down at the end of tomorrow, or at the end of yesterday, and then we went ahead and went up today. Another good stock to buy besides VDE for oil long term could be CVX, which is Chevron, and they are a very good oil company. I've been reading a ton of articles about them having the best balance sheet out of any other oil company, better than XOM. So if we check out XOM's chart, they're all going to look similar right now. But with XOM, you could make a bigger gain if it does end up going up. But CVX is going to be a little safer hold because they do have a better company overall. Not better overall, but their balance sheet is better, at least right now. And that's all we really need to see is down here at the bottom. You can see their earnings, which is going to be the negative 0.39 per share and stuff like that. And it's going ahead and rising right now, 1.78, 2.1. 2.27. So they're still making money right now, which is very good. They're not making it like they were back here, how they were making 2.98, earning per share, which is $2.98, per share, which is how much profit they made that quarter. All right, guys, this is very important that I cover this because ever since Sunday night's video, a lot of people have been messaging me, asking me if they could get in GUSH for a long-term oil play because GUSH is at $24 right now, and it could go back up to $500 like it used to be, or $300 like it used to be in the past. But the thing is that what people don't realize is that GUSH actually reverse split. It was actually never this high in price. It was more of more like, let's see, like $40, $60 a share, pretty much like right here is the day it would have reverse split, I believe. And then you can just see slowly over time it falls down, and then just slowly has been going down because oil's been going down as well. And so it does have another chance to reverse split if oil continues lower. But GUSH is a very good short-term buy. Not right now, but I'm just saying that it's a good stock to play for the short term. It's not something that you want to buy and hold for multiple days in a row. As you can see on this chart, if you would have bought on this Thursday right here, and then it popped up, you might have made a nice 13% gain really quickly if you would have sold quick. If you didn't sold quick and you held, now you're down 30%. So see, GUSH moves very quickly. Up here at the top, you can see how it's a 2x bull, which means it moves at a 2x leverage rate, which means that's just the rate that ETF goes up at compared to oil. So every day oil goes up like 6%. This should go up 12%, but this ends up going up a lot more because of the volatility involved. You can really see how much this moves whenever I zoom in on this 15-minute chart. And there's a whole bunch of stocks like GUSH that do this. You have GUSH, you have JNUG, which follows gold. You also have, what's another one? What's the one that follows natural gas? That's going to be DGAZ and UGAZ, which follow natural gas. So this is a 3x. So you can really see the movement on DGAZ. Let's check out UGAZ. That should be lower price. Yep. So you can see with UGAZ, for example, like you could have doubled your money right here. Very easily. Well, almost. You could have made 80% on this, but the thing is that you would have had to been right, and if you're not right, you could lose a lot, especially considering natural gas moves a lot overnight. So like, for example, like if you would have bought in right here $22, thinking it's going to go up the next day, and then overnight it tanks down, and then the market opens, you're opening up 7% down already before you can even sell the stock, unless you got up really early and sold it that morning, which you could do. But if you have stop losses in place, those will not react overnight most of the time, unless you set them up to do that, which for long-term stop losses, those don't really work well on these types of stocks, which is why I don't recommend them. Some good oil stocks you could watch that are safer are going to be CVX, Chevron, like I said before, Exxon and Mobil. It's not the safest one in the world, but it's still a good one to have on your portfolio, especially with a very limited amount of money. BP is another good one. They have a pretty good balance sheet compared to CVX as well. Like I said, Exxon and Mobil is the lowest of those three. Another good one is going to be VDE, like I said before in Sunday's video. VDE would be the one I buy personally. You can see it really has a very nice setup here. It's something like a head and shoulders. It's going down. You can see the shoulders here, and it definitely comes back and bounces off the shoulders right here and comes up. So it's something that you're going to be looking for to go down maybe a little bit. You could probably get in again around 42 maybe, but it's definitely something that's going to follow oil. So if oil goes up tonight, VDE is going to open up as well. So if we're going over good oil plays to buy, one I cannot leave out is USO, which is a very good ETF on oil. It is very low right now, about $5 as we see. If we go out to long term here, we can see that's really low, down to $5 a share. And this is a fund, so it's not going to reverse split like like GUSH will. So this is going to be kind of like VDE in a sense, except it's lower in price, so you can make 100% if it just goes back up to, you know, $10.92. And for it to do that, we need to see crude oil move back up to somewhere around $50 a barrel, maybe $60 to $65 a barrel. And all these oil ETFs will definitely explode. If you would have gotten into those oil ETFs, let's go back to the beginning of 2017 here, or the beginning of 2016. So if you would have bought into this oil ETF at the beginning of 2016, which is USO, let's go check. You could have made 50%, unless you kept holding, and then you could have made 100%. But most likely you would have sold at that 50% mark, and you see how easily you could have bought and made it very, very quickly. Now, if we go back to crude oil, you can see it's a nice move from the 26 level all the way up to 45 levels. Now, if it goes from 26 back up to 45 again, expect another gain similar to that. And that's exactly why I'm showing you guys this right now, because it has a lot of potential, especially in a portfolio full of a whole bunch of different stocks. Keep in mind, you're not going to want to have oil the only thing long term. As I said in the beginning of the video, you're going to only have about 15% of your position in crude oil. If you guys have any thoughts on oil, please leave your comments down below. Thanks for watching.